What are we doing today? We got a lot going on. Key things today that we really got to dig into is just same old, same old. What really has changed, if anything? I am on the wrong screen, which is great for me. Already making mistakes. There we go. Cool. Eddie Mines. It was Eddie Mines. Eddie Mines was sitting on the street corner playing guitar. Actually playing, yeah. Just once again, yes, I did get a haircut, but you could either have this or you could have that on the screen. We're not going to go with that. Things we're going to talk about today, Goldman Sachs saying, hey, something's got to give, everybody. The ongoing AI scare trade spreading. What is Claude going to replace today? That's exciting. Get to find that out. Diamond pre-crisis warning. Trump, State of the Union tonight. We got a new tariff update, and we'll talk about Japan. I'm just going to say right now, I'm completely on board with this AI revolution because I've cut my data costs down by an incredible amount, and we'll be talking about some toys that we're building right now, but we've got our own. Oh, that's not updated, is it? Nope. Let's do it live. I didn't update this. See, there's only so many hours in the day, and this is the fun part. You get to actually watch the numbers get updated in real time. So right now, look at that. Huge error. That's a huge curling error on my end. -9. Let's just go across the board. -9. Start the day. Our S&P 500 figure, our cap is -0.9, so that means weight is heading in the wrong direction. Let's update this accordingly. We are 9. Look at that. Boom. NASDAQ, 3 on the downside. And positive cap divergence at the moment on the NASDAQ, so a little bit of expectations that we could see some squeeze. Anyway, point being, we turn our attention now to volume-weighted average price and the Russell. Now that we are in this area that we're sitting, right, divergence basically at 1 means some of the cap stocks, some of the bigger cap names are trying to pull this market a little bit higher today off the bat as we look at this. So what it presents is an opportunity to trade volume-weighted average price once we get above key moving averages. All right. So now that people are just going to stop calling me in the middle of this broadcast, let's talk about the thing that actually really digs in. How do you calculate momentum with a ruler? Momentum is calculated by a variety of different factors, but the primary thing is we take all stocks that are in breakout zones versus breakdown zones. We calculate that based on weekly performance and monthly performance, assign it to beta. We have assigned it on RSI. We look at volume, and then we take our strongest stocks, a very small percentage of that basis, and then compare that against the negative momentum side. And it gives us an equation, number of stocks that are in breakout mode versus number of stocks that are in breakdown mode. And it gives us a positive or a negative figure. Why does that matter? Because, well, when this number is negative, there's some problems going on. Typically, this is a little bit of a liquidity issue. This has not predicted every crisis that has transpired since COVID 2020, but it has gone negative before those events. So it's not predicting the future. It is stating, though, that there is a high probability of a reversal. And right now, as you can imagine, we are having a liquidity event. We are having a major problem in private credit. This went negative on August 1st, 2024. 3 days later, the Nikkei blew up. This went negative, most recent period, like sustained negative, January 28th. 2 days later, gold and silver blew up, and then a week later, we had the largest momentum sell-off in, well, roughly one of the largest in 15 years. This went negative on June 8th, 2022. Over the next 9 days, we had the largest hedge fund sell-off in 15 years. This went negative on February 21st of last year. You know what happened next. It went negative on February 21st, 2020. COVID happened, and the markets completely cratered. Now, remember, the markets really didn't start to sell off for COVID for about 2 weeks previously. So, again, ebb and flow, it is all the stocks on the edge of a bell curve, And we're analyzing those equities based entirely on broad momentum strength and bringing everything down to a number. So this is based on a large number of academic reports. I did a big thing called the wave speech, which I probably should do again. Maybe I'll do that today. And the purpose of that is to showcase that in a world where liquidity is what drives markets, momentum is the direct consequence of liquidity. All right? All right. So big thing here, right? Goldman Sachs coming out saying something's got to give. They've been talking about it for the last couple of days, and it's showing up in the data. We are seeing this, right? And look, there's a possibility, and I continue to argue that really the only way that this market is going to really find legs, and I mean serious legs. I'm talking all of the predictions that you started to hear from firms at the beginning of the year. Remember, all these firms were saying we're going to 8,000, 7,800, 8,200 targets. Okay, where's the capital to do that? And that's really the core issue. A lot of the refinancing challenges that have existed for months, the Federal Reserve is providing support, but not direct stimulus. Japan is printing, China is printing, fine. But hedge fund dollars are moving to where the money is being printed, and that is in China. Big moves in purchasing in Chinese equities. Goldman Sachs saying there is zero S&P call demand. Now, zero is not a, hey, there's zero. It just simply means, what you think it means. They're making a statement that no one really is buying at levels they had seen in the past. And this is interesting, right? Because we are at one of the largest monthly sell skews in 4 years. Retail call volumes in megacap are at 2017 lows. One of the other things to point out about megacap stocks right now, in addition to the fact that what we've been talking about since August, September, October, the idea that money is going to rotate or has historically rotated out of these megacap stocks and has now shifted our attention and our imagination to where does it move next? Well, it's going into speculation and commodities. A lot of that we're obviously seeing. But look at the MAGS, right? Right? The MAGS, the MAG 7, if we go back 180 days, you can see this. It doesn't look that bad. It doesn't look that bad. But when you turn your attention to things like the FNGD, which is that leveraged ETN that we always talk about, and we always have to pay attention about whether or not this is above its 50-day moving average. What this is showcasing is a lot of leverage leaving the financial system. On top of that, on those MAG 7 stocks, we are not seeing levels of buybacks that we've seen since, I believe, 2017. So if buybacks are down, and that's one of the primary drivers of equity returns over the last 40 years, then retail's catching up to that. Retail's putting its money into chasing a lot of the safety trades. You're seeing a lot of capital flow into gold. You're seeing it flow into silver. You're seeing it flow into Exxon and the energy space, and of course consumer staples. The MAG 7's getting crushed, and the gamma flips negative in the minimal sell-off, coinciding with momentum thresholds from the CTAs. So flat week, flat month, sell-off scenario picking up, and the expectation for Goldman is that kind of range that we've been operating in for the better part of the last couple of months, just this sideways hum that continues to go back to our period in November, that we're going to have to pick a direction. But I'm going to argue that it's going to require some sort of monetary support or even some level of new easing in order to bring back that leverage that would go the other direction. The FNGU, which is the triple bull ETN, is now down 50% since the liquidity highs that we discussed in October. So it's a difficult environment for investors. It's a great environment for traders because we are looking for a one-directional move relatively soon. Adding on top of this, I mean, come on. What more do you want? This is a generational event. This is a I don't know how many times I can talk about it, but let's just remind everybody one more time for everybody in the back. Citrini Research put out a report 2 days ago that quickly went viral. And it seems like we are operating in the world of, hey, everybody, let's write an AI report and let's try to go viral. I'm on board. Let's do that. Let's write 17 of those with AI, by the way. That'll make it even easier. But they wrote this dystopic piece, and it basically explained what really is the worst case scenario for AI expansion into the information economy. And it's hard to refute it if you are a person who is looking for paralysis, right? The idea here is that the selling will spread beyond software. It will hit cybersecurity, private credit. They talked about Uber. They've talked about, virtually anything. And I'm just going to tell you, with as a person with extreme ADHD and an introverted personality, I love it because I have reduced the cost of all of my data sets in a week. And I have been able to now start to do the combination of a lot of the things that I never could in the past, particularly fusing different types of research that looks very comparable, but has to be actually combined and back tested. I mean, from a trading perspective, I'm on board. So, it's going to absolutely hurt my writing career, but I will say this, from a trading perspective, these are the types of things that I've been waiting for my entire career. So the opportunity to, look at this and say, all right, we have right now this big AI scare. And what is it creating? It's creating opportunities because in the data sets that we have, particularly around momentum, what has been showing up in the last week? What were the things that have, we've been talking about here? What were the stocks that were beaten up and broken down? Guys, it's been the same stuff that we've talked about over and over and again. It's been those KKRs and the Blackstones and the companies that are exposed to this. We're seeing it in housing. We're seeing it in some of the banking spots. We're seeing it already in the breakdowns in momentum. And from a trading perspective, yeah, it's a scary story, but I've got to trade what's in front of me today. And it is no longer a tech story. It's a credit story. It's a software story. It is a radical change, and it is a generational event that really kind of redefines a lot of things. And the reality is, rather than be paralyzed by it, what I continue to advocate is you got to run to that fire. You've got to trade it because this is one of those events. This is one of those events that transpire in time that you'll look back and you'll say, God, I wish I would have shorted some of these companies. I knew I was right. I knew I had the opportunity. I knew I should have been trading this stuff. It's right in front of you. It's right in front of you. And look, a lot of this stuff is not going straight to zero. It will chop. Some of these names are going to get blown up. Sometimes, and then once again, I'm going to remind you, once the deflationary element of this kicks in, if it really does kick in the way that Citrini talks about, what are they going to do? They're going to print money. So that's going to create opportunities in metals and mining and all of these other elements, because there's going to be this wave that we're talking about, and then there's going to be the monetary wave that follows. And it's very scary. And from an economic perspective, sure, I think about it, but I'm really not the way that I thought that I would. I see this as one of the single best investment and trading opportunities that we have had probably since COVID. So a lot of people go back and they look at COVID and they say, damn it, why didn't I buy March 25th, 2020? Why didn't I make this trade? Why didn't I follow the momentum? This right here is that. And that COVID period, that was China 2015, and that China 2015 was the ECB, and the ECB was 2008. This is going to be a little bit different, right? Because you're looking at disruption, but there are going to be radical winners and radical losers. And this is a generational trade. It's right in front of you. So we'll keep talking about it. There's a lot of opportunities here. And then I always cycle back to Mr. Jamie Dimon. I love this. And the other thing, just so that everybody knows, right? So what are you shorting? Right now, Booking, Synchrony Financial, Robinhood, Northern Trust, and I got to pull some other screeners. but we were heavy on KKR, heavy on BX. It looks like that's trying to find a bottom right now, by the way. All of these companies that are impacted by private credit. But yeah, it's a lot of banking stuff right now. It's just getting uglier. All right. So Diamond coming out and saying that we have pre-crisis analysis, right? The surprise for him was the software and AI space. The parallel was the echoes of 2005, 6, 7, saying, I see people doing dumb things. Okay. Big thing here is the same pattern on, boosting net interest income. The same pattern that happened in 05 and 07, and the cockroach analogy, the tricolors and the first brands imploded. And as I said, when that happened, guys, this was not the end of it. This is the beginning. This is the beginning of something significant. And once again, you have a liquidity mismatches that are starting to pick up. You're starting to receive redemption pressure. And if AI continues to be the disruptive pattern that it is, it's only going to fuel more redemption pressure, because at the end of the day, people are panicking about investment capital that's going into insurance companies and all these startups and all of this SaaS, software as a service. And it's not just that. It's everything. And it's also the combination of the fact that about, I believe, 30% of companies aren't really profitable and have concerns around debt, and they all have to refinance this year. We have an incredible amount of refinancing that has to be done in this economy in the next 12 months. And a lot of these names are going to die. And a lot of these companies that are tied up, barring some sort of large monetary expansion, once again, by the Federal Reserve, there's going to be more panic here. And this is going to be the trade. And I'll tell you what's probably going to happen once the Treasury General account starts to get spent in late April. Some of this stuff will see a relief in that pressure. And then we'll get this nice little quiet time in April, May, and June. And everybody will go, oh, I guess everything's okay. And then August and September and October will happen. It feels very comparable to a lot of the patterns that we have seen in the past. And when Diamond talks about this stuff, people should listen, because he's literally the last man standing from that period of time and was able to maintain his reputation very, very well. Trump's State of the Union tonight. Yeah. Everybody get a nice bottle of mellow corn. Be ready to drink. There is going to be a lot this evening. 10% global tariff takes effect today. 15% rate timeline still in question after the ruling. Okay. New national security tariffs are being considered on a half dozen industries. And once again, national security, that trade, that focus, that mercantilist approach that the Trump administration is taking, a lot of the top returns in the market this year are driven by policy. So we got to keep an eye on what is he talking about this evening? What type of momentum is created on the back of whatever the announcements are? The State of the Union creates a variety of narratives that are tradable heading into the next month, month and a half. Okay. The EU's warned about policy breaks. Great. Okay. Good luck, guys. State of the Union, Trump addressing Congress tonight. Watch for tariff escalation language. A lot of focus on Iran. Energy prices will be in focus, and Fed pressure. What is going to happen with Kevin Warsh? So they will react to the tone. Any bullying could obviously rattle treasuries. And once again, Israel saying that an attack on Iran is imminent. Finally, that got to keep an eye on this, everybody. What's going on in Japan? Well, Japan yen continues to burn lower. Well, that's good for the Nikkei. But if the BOJ is politically blocked from hiking their interest rates, the yen carry trade stays wide open. That means the global liquidity stays loose from the Japan side, and that can provide a little bit of a relief rally, particularly in some of those names that we've discussed in private equity that have been beaten up pretty badly, plus the financial sector. There relate reservations about further rate hikes, and of course they have, because the last time that we had a real serious conversation about rate hikes in Japan, the Nikkei crashed. And once again, that went negative on August 1st, 2024. 4 days later, the Nikkei had its worst downturn since 1987. Okay. How do you short? Just straight on margin? No. Oh, God. Put spreads primarily. I'm not borrowing stock, that expensive stock, for the purposes of shorting. A lot of the stuff that falls in our momentum list becomes extremely expensive. Extremely expensive. Are you worried about international transactions moving to Canada from the 4 big banks due to the 2% tariffs? I didn't even think about it. Would I add to ARCC? I'm long ARCC. So like I've been in ARCC since it was at like, where was I? 7? I think it was 7. That was 2009. I've never let it go. And again, even if ARCC pulls back and people are asking, ARCC is a closed-end fund that, or forgive me, a business development corporation that does a lot of the same things that some of these bigger players do, right? So we've talked about companies like, give me one second. I don't know. Like, I feel like I'm going blind this morning. Oh, there it is. Okay. ARCC is a BDC. So those companies that are getting cracked up a little bit, ARCC is linked to Ares Corporation, and as you can see, a relatively sizable downturn. Would I dump? There's no scenario where I would ever dump this. I don't see the point, because I'm going to just remind you, if this does pull back and it does crack, and yeah, it's going to look tough on paper. Okay. They're going to print money. So I'm fine just taking 10% on this annually and dividend reinvesting, as I've been doing. There's nothing here in this. Again, I don't care if I'm not taking this money out. Why would I want to take this money out and pay taxes on it? There's no rationale for that. So long term, it's probably going to 30, because once again, they're going to engage in monetary expansion. So use weakness, particularly long term. Again, like, this is a 20-year play for me. So that was 17. Man, I'm old. What happened? Hey, let's talk about the runner. Let me make sure that I got everybody's questions. All right. I haven't even looked into that bank thing. Same story as pets.com. Yes, this is that on. What is wrong, Ed Mines? A lot of snoring. All right. We're doing the runner. We got 10 minutes. We're fine. I know. You guys really, we're behind, man. This is a Baltimore City bus schedule that we're operating on at the moment. All right. TFSL, were you positive on this stock long-term a few months ago? Yeah, we're still very positive on TFSL. Once again, we believe that you're going to wake up one day and TFSL is going to be at $26 because they finally converted, but you're getting paid just to wait. Hey, the metals company. This feels like a Tim Robinson bit. The chair company, the metals company. What is that? TMC. All right. So TMC is a company that I believe is going to pull metals off of the ocean floor. Why not? Right? Hey, you know, it's a really good idea right now with the way that this stock is trading. This is a State of the Union special. If I'm going to speculate on something around State of the Union, it's going to be about strategic metals. It's going to be about how our company is going to be working to build these strategic positions for the United States. We haven't heard Trump talk about this. And TMC has had 2 relatively sizable spikes going back to October. Again, there were some announcements around the Trump administration. Same thing happened in January. The stock moved as high as 10. So if I'm going to State of the Union speculate, which is now a official trademarked, I think Theo now owns that. State of the Union. SOTU, speculate. Yeah, we'll put that on the subject line. Buying the 6, selling the 9, selling the 8, selling a spread, keeping this tight because once again, you're right back near that 8-day EMA. That 8-day EMA right now is fantastic. Hey, what's the other fun stuff that we can do? You know what we can do? Oh, I really hope this thing works. Let's see. Oh, give it to me. You know what you can do with AI, everybody? You can build your own freaking tools. Scott Dunn, everybody. You can build your own option profit calculator. Oh, no ads. No crazy stuff all over the screen. Oh, look at that. And it updates every 15 minutes. And I can do long calls and I can do call spreads. Oh, wow. That's fun. So what do you got going on right now? How about that 12th? Look at the volume on the 8. Right? There was a lot of volume yesterday on the TMC long call. For something of that size. And how about that 12? What do you think everybody's betting on, everybody? Probably State of the Union address. So we don't have data. Obviously, this isn't live at the moment, but here's some fun stuff for you. Pay very close attention to that bid-ask spread today. Look to buy at 6 because that's at the money. And if you want, you can sell up here where there's a lot of interest. People are buying up here. Buy here, sell here, look to sell a spread. And then, obviously, the real fun begins. Oh, wait, does this do what I think it does? Oh, it does. Oh, wow, look at that. Guys, this is the most fun I've ever had. Just nerding out on just Python. That's a good time. Hey, maybe we should use that. We can do a lot of things. All right. Hey, I don't have to have all that hyper red stuff and that woman trying to sell me bras. It's a great time to be alive, everybody. Here we go. All right, what else we got? Well, 6-8 on TMC is our call here. Let's go with that. Glue. What's that? Monte Rosa Therapeutics? Okay, this just seems like a bit. What didn't I learn now? Hey, you know what? Doesn't matter. I'm speaking extemporaneously this morning. I'm just going to say whatever I want. What's with all the negativity? Monte Rosa Therapeutics breaking above its 20-day EMA. Right? Looking at that 8 crossover, positive move here. Monte Rosa, look, same thing. Just buying the stock here, looking for a possible move back to around 24. Crossover, setting a type stop back at 17. STZ. What do? Well, that's the news. Constellation finally waking up a little bit. Are we just going with booze? Like, is that the play here? Constellation Brands. Waking up again. Look, same thing. Relatively simple strategy here. You're buying at that 157.50 level, buying there, and selling at the 160. Possibly even 162.50 if you see that. Going out to March, looking for consumer defensive improvements. Now, on the downside, PNC, it's the banking space that really is under a lot of pressure. We're seeing it in the regionals at the moment. We're also seeing it in a variety of, obviously, the closed-end funds and the private credit stocks. Looking to ride this stuff lower. Keep a very close eye on the FAZ. That's the daily bearish fund. Well above its 8, 20, 50-day moving averages. That's going to continue to signal weakness in the regional banking space. And this is why there really does not seem to be any one coming to save the regional banks at the moment. The Fed is doing what it can, and it's just not holding up. Bed Bath and Beyond, Bed Bath and Body Works, Bed Bath and Wash Yourself, whatever. Bath and Body Works breaking under its 8 and 20-day EMA at 22.33. This is another one of those consumer cyclical issues. Consumer cyclicals under pressure, largely due to a combination of tariffs and, of course, the ongoing financial crunch impacts on consumers. So do me a favor. Same thing. Spreads to the downside, 22.50 down to 20, 23 down to 19. Just using tight stops in order to play defense. Finally, on top of this, you have AMD, Blue Owl, and, of course, WBD. Owl is, again, just all this stuff is getting crushed. Just continued weakness, looking at continued weakness, and all the names that are related to it. Companies like Ares, still under pressure, have been on our negative momentum list for a couple of days, going back a week. Blackstone, same thing. Finally, on top of this, make sure that you pay very close attention to WBD and AMD. WBD, which has been, right, all of that interest and all of that hope around that deal, a lot of focus here, looking to see if we can get back into the 30s if somebody does want to step in and buy this thing, and we can see some sort of Netflix agreement. It seems that the Trump administration is pretty against Netflix being involved, and AMD breaking down. This is going to be, again, one of the major stories moving forward, is just what type of support is going to be found for a lot of these tech names, and how will NVIDIA play this week once we get earnings 2 days from now from the largest player in the pick and shovel universe. All right. You can't teach me anything. Okay. Bra buys puts on bra ad. Yeah. That's why WPP and all those other advertising companies are just getting slaughtered. It's going to continue to ripple. And this is interesting because it also is turning into one of the major fuels for valuation compression. And that is very significant because we've had all of these stocks that have been trading at these nosebleed levels driven heavily by inflows and liquidity expansion. And now the combination of liquidity slowing down with a justification for these multiples to compress, it will go quickly and it will go fast, and there still is a lot of juice to squeeze. The survivors of this space are some of them that do ultimately succeed and win. They're going to probably lose somewhere between 75 and 80% of their value. That's the historical norm for some of those players. The last stock I will tell you that is also showing weakness here is Carvana. And, I mean, Blake was right, everybody, right? But the weakness in Carvana, this can be back at the $200 level very quickly. All right, everybody, it's 9:20. We all learned something today, I hope. We'll go from there. Garrett, under these conditions, what's your opinion of TFSL? We've already talked about that. I'm long. I'm just long. I'm long TFSL. Think of it as a generational wealth opportunity. What, Python? AMD higher. Yep. We'll continue to watch that. The money printer will go burr later this year. We're not there yet. What's already going burr, right? We already know that. It's already going burr. They're adding $40 billion a month, $500 billion. What we really need to see is what I fully anticipate as I wrap this up on the last thought. We're going above $10 trillion on the Federal Reserve balance sheet, whether Kevin Warsh wants to or not. It's going to be inevitable. All right, 9:21, Don's coming up. I hope I made enough of a fool of myself this morning for everybody's entertainment. I will be back at 1:15 for some additional insight. We will talk about momentum and other opportunities. I hope you all have a great trading day. Let me know if you have any questions. Support at TheoTrade.com. Put Garrett in the subject line. Have a great day, everybody.
1, 2, 1, 2, 3, 4.